U.S. CPI preview, inflation to confirm Fed rate cut prospects. The Bureau of Labor Statistics will publish the highly anticipated Consumer Price Index inflation data from the United States for June on Thursday at 12:30 GMT. The U.S. dollar braces for intense volatility as any surprises from the U.S. inflation report could significantly impact the market's pricing of the Federal Reserve interest rate cut expectations in September. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. What to expect in the next CPI data report? Inflation in the U.S. as measured by the CPI is expected to increase at an annual rate of 3.1% in June, down from the 3.3% rise reported in May. The core CPI inflation, which excludes volatile food and energy prices, is seen holding steady at 3.4% in the same period. Meanwhile, the U.S. CPI is set to rise 0.1% in June after staying unchanged in May. Finally, the monthly core CPI inflation is forecast to rise 0.2% to match the previous increase. Federal Reserve Chairman Jerome Powell delivered the semi-annual monetary policy report and testified before U.S. Congress earlier in the week. In his prepared remarks, Powell reiterated that it will not be appropriate to cut the policy rate until they gain greater confidence in inflation heading sustainably toward 2%. Previewing the June inflation data, we expect the June CPI report to show that core prices remained largely under control after posting a surprisingly soft 0.16% gain in May, said TD Securities analysts in a weekly report. Headline inflation likely printed flat by MAGI as energy prices continue to provide large relief. Note that our unrounded core CPI forecast at 0.18% suggests larger risks for another dovish surprise to a rounded 0.1% increase, analysts added. How could the U.S. Consumer Price Index report affect EUR by USD? Investors remain optimistic about a Fed rate cut in September, but the market positioning suggests they are not fully convinced yet. Hence, a smaller than forecast increase in the monthly core CPI reading of 0.1% or smaller could confirm a policy pivot in September. On the other hand, an increase of 0.3% or bigger could highlight a lack of progress in disinflation and cause market participants to reassess the probability of an interest rate reduction in September. Aaron Sengazer, European session lead analyst at F Street, offers a brief technical outlook for EUR by USD and explains EUR by USD holds above the 100-day and the 200-day simple moving averages following the pullback seen earlier in the week, reflecting sellers' hesitancy. The Fibonacci 23.6% retracement level of the mid-April-June uptrend forms interim resistance at 1.850. Once EUR by USD clears this level, it could face next resistance at 1.900 to 1.915 before targeting 1.1. On the downside, technical sellers could take action and force EUR by USD to stretch lower if the pair drops below 1.800 and starts using this level as resistance. In this scenario, 1.750 could be seen as the next support before 1.680. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.